Hello there and welcome to this live webinar about the Savills Offices Trends Report. During this webinar, we will tell you all about the latest state of the Dutch office market. I'm joined today by two colleagues, Jan de Quay, our Managing Director and Head of Investments, replacing Reinier Wegman, who unfortunately had a last-minute other obligations, and Win Yan Lam, Research Consultant of our Research and Consultancy Department. A short introduction before we get into the webinar. Now that the pandemic in the Netherlands is fading into the background, it's time to look into the future. In addition to the changes brought by the pandemic, we see some other major developments that are impacting the office market and will impact the office market in the years to come. There are three major developments which we will discuss today. We see that one, the changing function of the offices is manifesting itself increasingly strongly. Secondly, startups and venture capital inflow are creating a robust demand for flexible office space. And thirdly, sustainability will play an increasingly important role in both the occupier and the investment market. So according to the Savills report, these trends will further widen the gap between prime and secondary offices. This is creating challenges, but also opportunities for new and existing offices. We will start by discussing the occupier market, and Win Yan, I will start with you. Of course, the advice to work from home has been lifted, but still many of us still work from home or work remote regularly. And when people do come to the office, what do they expect from their work environment?
Yeah, that's for sure a topic which is discussed a lot these days. So perhaps we could offer a little bit insights into that to our viewers using the data that we have. And for that, it's useful to have a look at the graph, which hopefully is shown on the screen right now. And that graph essentially is one of the results of an analysis that we did, or a survey that we did called Savills Office Fit last year. And in that survey, we asked tons of questions to many office workers across EMEA. And one of the questions was, if you look at all the work that you have to do, what are the things that you prefer doing in the office? And what are the things that you want to do ideally at home? And the answer to that question is summarized in the graph. And what you see there very clearly is people want to go to the office to have social interactions, in the sense, meeting with the teams, meeting with clients, meeting one-on-one, have a coffee perhaps, and also do work together. So very social and very collaborative. And I think that means for the office that it ideally should provide such an environment.
And Jan, in order to attract and retain talent, which is of course also a huge challenge in today's labor market, how could offices differentiate themselves?
Well, the simple answer is that you have to create an office where employees want to go to and want to stay. And the question is, how do you do that? Well, so to have an office, an attractive office on an easy, accessible location, that is very important. Make sure that employees enjoy to work at that office and facilitate social interaction for employees and for clients.
To facilitate the needs that Win Yan just explained.
So you have to offer different functions for the different type of work, other than the traditional office use we had. So apart from normal desk and meeting rooms, you have to have rooms for video calls and concentration, rooms for collaboration and brainstorm sessions, attractive communal areas, including healthy meals, and outside space for fresh air.
Yeah.
And not in the least, be cautious about the footprint. This is what talent finds important. So practice what you preach on environmental issues, and the office should reflect what you are or want to be. And if you get this right, you have a big chance in attracting and keeping talent.
It's very much focused on, I think, the function, as you say, so more room for interaction, maybe brainstorming, collaborating, and on the other hand, like well-being and other ESG factors, which today's workforce find very important.
Absolutely.
And are there any good examples of successful offices?
Well, the strange thing is, it's not a new concept. If you look at companies like Google, they have adapted this concept actually years ago, but we as a traditional office found this over the top, too expensive. We didn't want to do that.
We didn't want any slides in our offices.
No, but now we see that this is necessary to attract the talent and to keep them in our offices. So we have to adapt to that kind of model. If you look at a very traditional office user, a law firm, DLA Piper moved from the outskirts of the South Axis to the center of the South Axis, and they will adapt this new office use as a lawyer's firm. So that is very remarkable.
Yeah.
We see that it's very essential for business services to have personal contact, to transfer knowledge. I think that is essential, and the office needs to facilitate that. So there's also tech companies. They have a little bit different model, the Google model. They're more focused on brainstorm sessions, on creativity and innovation. For instance, Help Desk Scale Up Krengo, they leased 4,000 square meters office in Central Park.
In Utrecht. Yeah.
And this to preserve the creativity and energy of its business. So concluding, the office should reflect the DNA of the business you're in.
There's not one
No,
one
absolutely not.
good office design.
The only thing is that the 10 square meter per employee is history.
Yeah,
That's
yeah.
what we know for sure.
Yeah, I know that from our colleagues. Of course, we have an occupier services department who advises office occupiers on their office space, and they always stress the importance of the preliminary phase. So really doing questionnaires, workshops with your employees, cross different services and hierarchy to really make sure that the office space that you design fits the DNA of your organization, as you say. So
well, we've done that recently with our own offices.
Oh yes, we did.
It's clear that we will need more office space and not less to facilitate all these functions.
Yeah, that's another question that I had, because you say that the 10 meters per office user, which used to be sort of like a measuring tool used in tenant representation, that is no longer relevant. Win Yan, what do you see in your data? I know during pandemic, of course, there was a lot of discussion about will working from home and working remotely, will that drive less demand for office space, or and after the pandemic we said we need more square meters because we need more room for discussion and collaboration. What do you see? Is there more or less demand for office space?
Yeah, that's really the $1 million question, isn't it? Two thoughts on that. First of all, what we discussed just now, very obviously, greater emphasis on well-being of employees, more social interaction, more collaboration. I think it's fair to say that that is very likely to sort of require more space. On the other hand, we have this thing called working from home, right? Mm-hmm. And that is likely to have a negative impact on the demand for office space. Having said that, you always have to keep in mind what are the local specs, what's the local market like. Every country is different. And if you look at the Netherlands, we Dutch people, we love working from home. It's something that we already did before the pandemic. Nearly 40% of the Dutch working people already worked from home every now and then. Before the pandemic, there was. On average, it was 4 hours a week, and at CPB, Centraal Planbureau, they estimate that it's going to be 8 hours a week after the pandemic. To be fair, what we see in the market is likely to be a little bit more, so maybe 2 days a week at home, 3 in the office. So it's really something that still needs to pan out. But if we look at the Netherlands, we do expect that the negative impact of working from home on office demand is going to be, well, relatively mild, especially for high quality buildings, prime locations.
Yeah, and are you seeing that also in, we're now in the, we closed off the first half of the year. Do you see that in the take-up, or are the effects of working remote still relatively limited?
We still have to see that, yeah, still remains to be seen.
Of course, the contracts are long. Well, we're diving into the next section, which is about another trend. But before that, I would like to note to the listeners that if you have any questions, you don't have to wait until the Q&A in the end, but you can feel free to pop them into the chat. I can see them here on my tablet, so you're more than welcome to ask your questions as we go along, and I will be sure to ask them to Win Yan and Jan. The second trend that the development that we discussed in the intro is the solid demand for flexible office space. Win Yan, I think if you look back, we used to have the idea that the demand for flexible office space was mainly coming from startups. Is that something that is still the fact, or are there also bigger companies like big enterprises looking for flex space in the Netherlands?
We do see that, but I think it's fair to say that most of the demand is still coming from smaller companies, startups, as you say. Of course, because flexibility suits their needs better. They want to grow and very quickly, and that makes long-term leases not that attractive for them. So if you look at Amsterdam, for example, very large startup community, many startups, I think 6,000 or a little bit more even. And that is also reflected in a way in the flex office market because it's relatively large there. So 6.3% of the total office stock is flex in Amsterdam. If you compare that to Rotterdam, for example, that's only like 2%, a little bit more than that. So very large.
And I know from an international perspective on our Work There platform that 6% of the office stock for flexible is still relatively low compared to, for instance, the UK. So I might imagine that there's still room for growth there. So the startup community still is an important driver of demand for flexible office space. Jan, do you see any other drivers of that demand?
Well, startups attract venture capital. Venture capital attracts startups, so there's a whole ecosystem behind this. So essentially, venture capital is one of the drivers as well. Looking at Amsterdam, startups like Amsterdam, because it's a great place to live and work, as I do. Office rents are relatively low compared to other cities in Europe, and a highly educated workforce. So all those elements are important for startups to look at Amsterdam to start working. And the question is, how successful is Amsterdam compared to other European cities? That is looking at the capital value of the startups backed by venture capital. For Amsterdam, that is 100 billion. And we come in third in Europe. And I think there's a graph that shows that.
So it seems like a bit of an ecosystem of venture capital that is inflowing into the Netherlands and Amsterdam specifically, causing a very healthy startup community, which drives the demand for flexible space. And of course, these startups are also growing into larger businesses. For example, Adyen or Molly or tech companies that are very popular in the Netherlands. So might be also growing demand for conventional office space in the end. I would like to talk more about the third trend that we see in the current office market, which is ESG. I think the most heard word of the current times. You touched upon it a little bit already, that occupiers and employees of those companies are increasingly also thinking about the footprint of their office, but the footprint of their company, and striving to reduce their footprints. Win Yan, do you see any effects of this trend in the demand for sustainable office space?
Yeah, we do. Two things that I can mention about that. First of all, if you look at the take-up, for example, in Amsterdam, 70% now of that is office buildings with an EPC rating of A or above. Now, if we go back into time, 10 years ago, it was only 30%. So that's quite a substantial increase. Secondly, what we've done is look into the average rents paid for office buildings with an EPC rating of A or above versus B or worse. And perhaps it's interesting to have a look at the results of that analysis for Amsterdam. I hope that's shown on the screen right now. And if you look at that, what you see is in 2013-14, there was no difference between them. Nowadays, it's 35 euros per square meter difference. So the question then is, okay, why is it? How can we explain it? And I think, to be fair, it's probably sort of a whole package. Office buildings with a higher EPC rating tend to be newer buildings, probably also maybe have solar panels, more energy efficient, higher quality, and all that probably will explain the gap, I think.
Yeah, so it's not just the sustainability, but maybe also the quality of the building, the additional services that are in the newer buildings coming together, explaining that rental gap.
Yeah, I think so, probably.
And Jan, we will now move into the investment market, which is, of course, your field of expertise. So keep it short, because we only have half an hour. I know you can talk about this for days. But what is the biggest trend that you see in the Dutch office investment market?
Well, actually, it's two elements to that. One is the construction costs. As we've all seen, they've exploded in the past year. Due to post-COVID production problems and high demand, the costs went up to produce. But also the war in Ukraine, raising oil and gas prices, doubled them, tripled them. This makes manufacturing materials more expensive. But now, since shortly also the swap rate, the euro-dollar swap rate, which is now at par. That's the first time in 20 years that has happened. We have to pay more money, more dollars for the oil, which even increases the costs for materials even more. So the effects on buildings, on renovation, on sustainability, they will all rise and make it more difficult. As we see in the market, a lot of projects are either suspended or downsized or even killed. So that's a negative effect of that trend. And to that, we think that construction costs will be rising another 10, maybe 15% for the whole year. So that is quite a lot.
And that's a lot of information in one answer, and a lot of trends going on. But if you look at your clients, what kind of questions do they ask you about these trends? What are they? Yeah, what are their concerns, or do they see opportunities in this market?
Obviously opportunities, because a lot of the investors will look at the sustainability of their portfolio, and then there's a hold or sell for, let's say, the lower end of their portfolio. Will they renovate it or will they sell it? And that is an opportunity for others to step in, either renovate or redevelop those kind of assets.
Yeah, you talk about sort of looking at the sustainability of your portfolio. Of course, we just talked about the rising demand from occupiers for sustainable office space. Is ESG still high on the agenda of investors, or are things like the Ukraine war and the construction costs rising more top of mind?
Maybe can I one step back, because there's one more trend which is very important, which is the rising interest rates, which makes it much more difficult to get lending, much more expensive, and investors need their returns, which they have agreed with their investors. So prices can only go one way, which is down, at least for the, let's say, the semi or worst product of the market. That's not for prime. I think prime, as you said, will remain in the same bracket. They will move a bit, but it will be interesting for the coming future.
So
about ESG.
Yeah, about ESG. What do you hear from your clients? Are they also, when they're acquiring, for instance, so they're looking on the ESG of maybe their existing portfolio and looking for opportunities to maybe upgrade, and when they're looking to acquire new properties, is ESG really part of their specs?
It's top of mind.
Yeah,
absolutely top of mind. Depends on the type of investor. You will see, let's say, the private equity will look at the lower end of the market, where they will have to change what I said earlier. But the other investors, the higher end investors, they will absolutely invest in sustainable office buildings or office buildings they can change very easily to a sustainable level.
Yeah.
And they will calculate that in their acquisitions.
Yeah, I'm also interested in what that means, because of course we looked at the occupier demand, and you saw sort of like the rental gap between energy label A and B or worse. Is there something similar that you see in the investment market, maybe for energy labels or for BREEAM certifications?
Yeah, we do. Perhaps Jan can elaborate on that one. Yeah.
Yeah, that's an interesting one. It's the there's a something we looked at, the value difference between non-sustainable and sustainable, and we looked at to make it a bit smaller and calculable. We looked at the Randstad area for non-BREEAM and BREEAM buildings.
Yeah.
And for 2018, the gross initial yield average for office space was 5.8%. In 2021, the average was 4.95, which is not surprising. The market improved and the yields went down. But then the exciting part is that for non-BREEAM in the same period, the average gross initial yield went up from 7.6 to 8.7. And there you see a yield gap growth of from 180 to 375, so more than doubled.
Yeah.
And that means that non-sustainable buildings, non-BREEAM buildings, they have a strong devaluation.
Yeah, the bound discounts, as our colleagues from the valuation department call it.
I think is there a graph for that?
Well, there is in the already showing on screen,
Okay.
probably. Yeah, I think it's also good to look ahead, which is difficult in this time, because there's a lot of things that are sort of playing out and we can't see it in the data yet. But looking ahead, Jan, what do you expect will be the biggest trends in the upcoming months for the Dutch office market?
Well, there's two sides, occupiers and investors. On the occupier side, I think the occupiers will focus on, let's say, changing the use of their office, getting workforce back to the office as much as possible, to get the interaction, to get the knowledge interaction between colleagues and clients. On the investor side, the values will deteriorate for low quality assets. That is something that was happening already, but it will be stronger in the coming months, even half a year to a year. That's a strong move to prime. That will absolutely happen. And on the short term, very active Q4 2022.
Yeah.
We see and hear there's a lot of sales being brought to the market after summer.
Okay.
So investors are trying to use this window of opportunity to still sell.
Is that specific for the Netherlands? I know you also have a lot of contact with our international capital market teams.
This is almost in every country.
Yeah.
Almost every country. So that will happen. The prices will be a bit lower than let's say prices from 2-3 months ago.
Yeah.
But still, investors will be making a nice or reasonable profit, and they will try to offload the product they were wanting to offload anyway. Next year, 3 to 6 months, we think there's a caution period. We don't know what's going to happen with Ukraine or with the economy, with the interest rates. So there's the investors don't want, as they say, catch the falling knife. So there'll be a waiting period to see what's happening in the market. There will be some transactions, but I don't expect a huge amount. Banks will be increasing margins and or pulling back, depending on what the market will do. There'll be less buyers in the market, and if they are there, they'll be chipping the price. So that's a clear one. And for the medium long term, when geopolitics calm down, well, then prices and the market will calm down and will return to normal. Investors will focus anyhow on sustainability of the portfolio, so selling off either the lower part or redeveloping that.
Yeah.
And private equity will return to the lower end of the market, as they did in 2008, between 2011 and further on, for transformations or upgrade these assets to a sustainable level.
So quite a different dynamic than the years
absolutely,
behind us.
absolutely
Yeah,
different dynamic. And it's something where, well, bracing for is maybe harsh, but we see it happening. We've seen it before. I've seen it before.
yeah.
And it doesn't worry me. There'll be a correction of the market, which is also a healthy thing.
And probably if you look at the fundamentals underlying the Dutch office market, I think we will be strong enough to recover after the storm has passed.
Absolutely. I think compared to other European countries, especially Southern European countries, our economy is a lot stronger and much more flexible. So I think this time around, we will be getting back quicker than the
we
last
did
crisis.
in 2008.
Absolutely.
Yeah. Win Yan, do you have anything to add about the outlook? What do you expect to see in the research?
I think probably more what Jan already described, actually. So a greater split, greater gap between prime and secondary offices, for sure. Yeah.
Yeah. Okay, that was it for us discussing the report. I'm very curious if you have any questions. You can ask your questions, you can direct them to Win Yan or Jan, or just pop them into the chat. I see one coming in now. It's not specifically for either one of you, so please let me know who wants to answer it. But the question is, can you shed some light on the impact of the pandemic on vacancy rates in the Netherlands?
For me?
Yeah.
Well, I think vacancy has stabilized, but we do see some more subletting in the market, which is well, obvious if you look at people working from home. And also, I think there's more transformations than before the pandemic. So it was, if I'm about 7% before the pandemic, it's about 10% now. So those might be indicators of that.
Okay, I have another question coming in. Win Yan, I will give this one to you. Does the demand for sustainable office space focus on specific cities, or do you see it across the Netherlands?
Fortunately, we do see it across the Netherlands. So we talked about Amsterdam a lot, but also say in Utrecht, Rotterdam, we see the same thing going on. So what I said about Amsterdam, for example, 70% of the take-up being offices with an EPC rating of A or better. For Rotterdam, off the top of my head, that's about 60%. Not as high, but still a good thing. And also the rent gap that we discussed for Rotterdam, it's about 19 per square meters. So again, not as much, but still, yeah, something that we do see.
But the cities, let's say, not in the Randstad, I guess they will be struggling more to get their buildings up to a standard, sustainable standard, because the rents are lower.
Yeah.
You need some investment, of course, to make that upgrade.
Well, rents will have to rise in those areas, which well is inevitable.
Yeah. I have another question. How is the Netherlands dealing with the energy label C obligation? Something that we didn't discuss during this webinar in detail, but for the people viewing who might not be aware, might not be from the Netherlands, in the Netherlands we have from January 2023, you can no longer lease an office that is below energy label C, correct? Which is a deadline that is approaching quite rapidly. We've discussed it in a couple of reports before. Any update on how the Netherlands is doing?
The short answer is actually, unfortunately, still a lot of work to do. Yeah, if you look at the G5 cities, so that's Rotterdam, Amsterdam, Utrecht, Eindhoven, The Hague, about 9% of the office stock still doesn't meet that requirement. So, and it's only like 5 months, so that's quite substantial.
Yeah, I will be very curious to see how it will be sort of managed or gehandhaafd, I don't know the English word, but enforced after January, because there's still so much office space that doesn't
It's good to notice that, or to say that listed buildings are exempt from the obligation for level C. And especially in older towns, Amsterdam, The Hague, Utrecht, there's a lot of buildings there which don't have that obligation.
And if you would like to know more about this topic, there was a recent blog from our colleague Jordi Diepeveen with a lawyer from Hemwood, Niels van Tamelen, about what to expect in the investment market for this obligation. Also, what we advise and other advisors to put into like investment memoranda and things like that to make sure that a deal doesn't sort of get ugly because this is not discussed properly.
What I do understand is that if there's an upgrade, it usually is not to label C, but higher, to label B or even A, because the obligation is going to move.
That's also what our colleagues from the building and project consultancy team would advise our clients, because of course we do believe that it will not stay at label C, but in the coming years it will be an energy label A obligation. And then if you have to renovate again, of course you will have extra costs. So I have no questions in the chat. If you do have another question, please pop it in quickly so we can answer it for you. And if not, I will go to the closing of this webinar. A short summary of what we discussed today. I think one important thing was the changing role of the office. So we're now really seeing the changing dynamics, the added value of having your office as a sort of breeding ground for interaction and innovation, and the focus on employee well-being. Secondly, we talked about our very healthy startup ecosystem, the venture capital inflow, and also our sort of growing tech company ecosystem, which is creating a very robust demand for flexible office space across the Netherlands, but specifically very much so in Amsterdam. We of course also discussed the demand for sustainable office space, partly driven by that energy label C obligation, but also the pressure coming from occupiers and possibly leading to more rental growth. We talked about the investment yield spread caused by the difference between BREEAM certified and uncertified office buildings in the Netherlands, which has more than doubled. And we discussed that the report foresees a widening gap between prime and secondary offices in the Netherlands. I think that's a good summary, right, of what we discussed today. If I'm missing anything, let me know. I would like to thank you, Win Yan and Jan, for joining me today. Win Yan is our research consultant working on the Offices Trends Report and other reports of our research department. Jan de Quay, Managing Director and Head of Investment Department at Savills in the Netherlands. And of course, I would like to thank you, our viewers, for dialing in today. We will share a recording of this webinar, which you can refer back to, but also share with colleagues or relations that you think might find it of interest. And next webinar will be in September, and we will discuss our Market in Minutes reports, which is a quarterly update on the entire Dutch market. So not only offices, but covering all commercial sectors. I hope to see you then, and I wish you a very good day. Thank you.